Hey guys, I just wanted to jump in for a second and let you know a little bit about today's live stream sponsor, DNA Funded. DNA Funded has very generous profit sharing up to 90% and 3 different unique challenge types. For those looking to get funded, they also have speedy payouts, unlimited trading days on the first and second phase of their challenges, a very wide list of different things you can trade with over 800 different assets tradable, and maybe the most important component, a very experienced team behind the whole operation. So if you're interested in learning more about DNA Funded, click the link, check it out, see if it's right for you, and make sure to do your own due diligence to see if what they have to offer fits your trading style. For 20% off, you can use code A1T20. Again, that will be 20% off any of their challenges you'd like to check out. Thank you again to DNA Funded for sponsoring today's live stream. Now back to the show. Hey everyone, good morning. Welcome back to another live stream. Thank you for being here. And a big thank you, as you just saw, to today's video or stream sponsor, DNA Funded. Check them out if you're looking to get funded. If this is your year where you are, I've come across a lot of people who every year they make the New Year's resolution. This is going to be my year of trading, right? And some people actually end up doing that. But a lot of times people will jump right into prop firm challenges and trying to scale up their trading when they're not truly ready. So I do want to just say, when it comes to, the live stream sponsor today, DNA Funded, we've had that conversation with them too. They're after people who are, the more experienced level person who wants to come and approach trading and take it seriously and actually get funded because they have the skills, not rush the process and just dump a bunch of money into a small trading account or a prop account, whatever it is. Don't make that mistake. Make sure you're ready. But if you are at that stage where you feel you are ready to scale things up, check out DNA Funded. Use that promo code that you just saw there. So let's see what we've got. So just a heads up, we have got, let me check here. We've got 13 minutes to go until we get the big statistic of the week, the consumer price index number, which will give us an idea of what's going on with inflation. In this stream before the number drops, I'll give you just a map out of what we're going to do. We're going to take a look at several charts. I'm going to talk about some of my ideas and setups for potential post trades CPI. I do want to just clarify that on these streams, we do not gamble on the news spike. We don't make a call on which way it's going to go 30 seconds before and leverage our account. That is very dangerous stuff that is likely to blow your account. So we don't mess around with that stuff here. But what we do here is we discuss the consumer price index, the statistic that it actually represents, and where it could move markets next in a bigger picture, in a broader sense. Rising inflation, falling inflation, those things carry significant impact to macro trends in gold, silver, the NASDAQ, the S&P 500, the euro, the US dollar, the British pound. All of these things are potentially impacted by US inflation statistics. It's a really important stat because, again, it ultimately is one of the key guiding tools that the Federal Reserve looks at in order to cut interest rates, aka turn on the money printer, or hike interest rates or hold them, which is not printing as much money into the system. So it's a really important statistic. As you can imagine, lower interest rates, lower borrowing costs are better for people who want to go buy houses, buy cars, for businesses that want to take loans out, for pretty much all sorts of economic activity. Cutting interest rates is a positive thing. So why doesn't the central bank just cut interest rates like crazy right now? Well, because inflation oftentimes can get out of control if you cut interest rates too quickly, too much. So in this stream, what we're going to do is we're going to talk about CPI. We're going to talk about some charts here leading up to the event. I'm going to discuss gold. I'm going to look at the indices. And then most importantly is after the statistic actually comes out, we're going to then discuss how it could potentially move the markets for days and even weeks to come. So we've got all of it on lock. It's a really important stream. So I hope you'll stick around with me. Hit that thumbs up button if you just tuned in. Subscribe if you're new. We do these for all major economic announcements. I break them down as best I can. Let's talk gold. Gold's been stuck in a range on the daily chart. The 4-hour chart is also, it's a little bit wonky. You've got back and forth movement. This has been a chop fest the last several months in gold. It's not been a great place in terms of trend following opportunities, unless you're, I don't know, trading like the 1 minute chart or something like that. But from a big picture standpoint, what are we looking at for gold? Well, the answer is gold likes rate cuts. Specifically, gold likes rate cuts when they're panic rate cuts, meaning the Fed has to cut rates really quick to try and save the economy. Gold likes that because gold likes chaos. If, however, you get a hot CPI print today, it could be interesting because we have to look at the full context. We can't just look at inflation. It's not the full picture to only look at the inflation statistic. We have to look at where the economy is at. So we did get really strong GDP growth out of the United States, but some economic indicators that we look at, like the Purchasing Managers Index, which is a forward-looking indicator of the economy, has been pretty lackluster in both manufacturing expectations and services. So there's some blemishes here. We also had a really poor jobs report that came out last month. And so we look at that, we say, okay, jobs data not great, economic growth indicators mixed. Inflation's going to carry a lot of weight here, because if you see, like last time we had a 2.7% reading. The forecast was for 2.7. Let's check really quick what we're looking for today in the consumer price index. Let's see what the forecast is for today's statistic. The number is expected to rise to 2.8%. So inflation today is expected to rise. So the market is already expecting a rise in inflation. But what happens, let me ask you guys to think about this, because I know there's a lot of regular viewers who may want to challenge himself for a second. What happens to gold if inflation comes in really hot today? I'll give you a second to think about it. Hot meaning higher than expected. So the forecast is 2.8% for CPI. What happens to gold today, guys, if we get 3%? What happens if we get 2.9%? CPI year over year. What does that do to the price of gold? Think about that for a second. Well, it's kind of a trick question, in my opinion. Yes, it is bullish for the dollar. If inflation comes in hot, I know this is a little confusing to new fundamentalists, but hot inflation is bullish for the dollar, given that the economy is in a good spot or in an okay spot. Why? Because rising inflation makes the Fed keep interest rates higher. Higher interest rates, stronger currency. Stronger currency, weaker gold, right? So higher inflation than expected would be bearish for gold. But there's a caveat here. There's also the possibility, the concern that what if you're getting jobs data, which has been a little bit lackluster, and inflation that starts to rise? Like, what if we continue to see a stiff, rising inflation statistic? What does that do to the story? Does anybody know what we call this situation? What do we call the situation when you have slowing growth, aka jobs, and rising inflation? We call it stagflation. That's correct. A couple people, you guys already got that. Yes, stagflation. You guys are beating me to my own points. I love it. So stagflation. Wait. So Nick, you're saying if inflation goes up today or inflation goes down today, both of those could be bullish for gold? Kind of. So here's my opinion. This is my best guess as to what's going to happen. If CPI comes in, and again, I say best guess because nobody here knows what CPI is going to be. You're going to have people in the chat who say, Nick, should I buy gold? Nick, should I sell gold? Look, I don't know where gold's going to go in the next 30 seconds. I can't tell you that. I'm not a wizard. I'm not a fortune teller. I'm not a magician. I'm a trader. Traders make risk to reward trading decisions based on probabilities and educated guesses. We don't know what the market's going to do, and gambling on what CPI is going to move in the next 5 minutes, that is just pure idiocy. Don't do that. I don't know if that's a word, but don't be that guy, because again, I've been that guy. It's stupid. The markets, the spreads on your brokerage are going to widen dramatically. Everybody tries to gamble on it like it's some sort of roulette wheel at a casino. Casinos are more fun, okay? If you want to go lose your money and have a negative expectancy, go play in a casino. But here, what we're going to do is we're going to talk about the CPI and how it could impact the trends in the next days and weeks. That's what we do every single major key, CPI, NFP, etc. So if CPI comes in hot or CPI comes in cold, I can kind of make a case that it's still bullish for gold in either direction. Let me explain. If CPI is, let's do the easier one. If CPI is cooler, then the Fed can cut interest rates in September, and the market's going to say, oh yeah, that's good. Gold can move higher. In my opinion, that would be bullish for gold. What if CPI comes in higher than expected? Oh, that's gold. That's bearish for gold, right? Is it? Why would it be bearish for gold? Because the Fed's going to hike interest rates? No, they're not. They're not going to hike interest rates. The economy is already starting to slow. Wait, so they're going to hold interest rates? Well, maybe, but what if the economy continues to slow and you have rising inflation and we enter into stagflation? Well, I think the economy, if it starts to hurt and people start losing their jobs, the Fed's going to cut interest rates anyways. Stagflation is super bullish for gold because people lose faith in the sort of US economy and the Federal Reserve, and gold skyrockets. So what I think would happen is if you get a hot CPI print, gold moves lower. And then ultimately, I still think there's an upward drift that comes for gold after that. So I'm pretty bullish on gold. I'm not saying, oh, in the next 5 minutes, gold's going to rally like crazy. I'm saying in the next like few months, I think gold should generally move higher, more likely than it will move lower. I could be wrong, but educated guesses are all we can do in markets. You can tease people all day long about, oh, he thought he was going to be right. He thought gold was going to go down, or he thought NASDAQ was going to go up, or she thought that. Nobody knows for certain. All this is educated guesswork. Great traders know they can be wrong. Dumb traders on the internet think they're always right. That's the clear distinction. Great traders acknowledge it's all probabilities. You're going to be right sometimes, you're going to be wrong sometimes. As long as you're making more than you're losing, that's all that matters. Let's talk indices. What happens if you get a hot CPI print today? Pretty straightforward, not good for stocks. Stocks want cool inflation. They want rate cuts. They want appeasement. They want stimulus in the form of money printing, in the form of lower borrowing costs. This one's easier than gold. Gold is the hardest one today to understand fundamentally. Stocks and dollar, pretty easy. Stocks want cool inflation. Cool inflation, lower than expected CPI. All right, we get rate cuts, economy, stocks and individuals, consumers, they can borrow money at lower rates. These are good things for stocks, right? That's what stocks want. What about the dollar? What about the dollar? Does the dollar want, when I say dollar, does the dollar move higher or lower if you get a hot CPI print? Think about it in the audience. Feel free to drop it in the comment section if you want to, or the chat, if you want to challenge yourself. If you get a CPI print that comes in hot or higher than expected, is that bullish or bearish for the dollar? It's bullish. Why? If inflation is sticky, problematic, and not going anywhere, or even rising, is the Fed more likely to cut interest rates or less likely? Less likely. They're less likely. There's still the possibility, again, all probabilities, but the dollar would move higher on a hot CPI print, most likely. Can it hold those gains? That's another story. There's a lot of factors in, where price goes ultimately. But what about, last question, we have to think about this too. What about if inflation just comes in line with expectations? Well, then all the people who are gambling on the news, they're going to lose a pretty penny, because what's going to happen is they're going to go, oh, it's going up, and they're going to buy it, and then it wicks down, and then they're going to sell it, and they're going to wicks back, and don't be that guy. Again, this is why you do not want to be trading the spike. Some people will do it anyways. Have fun if you want to gamble, may the odds be ever in your favor, whatever. But we're not gambling here. We're not going to trade the spike. We're going to trade what the trend actually tells us, what the fundamentals tell us based on this inflation report. So we've got the number coming in here in just a moment or so. I'm pulling up our all markets view on the screen right now so that we can watch this together. We have stocks. You have the S&P 500, the NASDAQ, the Dow Jones, the Russell. You have gold right here, Bitcoin right here, oil right here, and the dollar index here. We've got just 15 seconds to go here. We'll watch the reaction. And then more importantly, don't go anywhere, because we're going to actually discuss what this inflation report means for forward-looking potential moves in the markets. Coming in right here. Let's see if we get anything interesting. All right. Initial move higher here for the Russell, for the stock market, generally pushing higher here. Boom, there goes. Look at that. Nas, S&P, Dow Jones, Russell initially moving higher here. Dollar is initially lower, looking like we may have gotten a little bit of a soft print here, guys. Gold is reversing course here. Not a huge move on gold, but you've got a huge move on the indices. Take a look at the S&P 500. What is that in terms of a move? Oh, it's not huge, actually. I take that back. You are positive now for the S&P 500, for the Dow Jones. Watch these candles, guys, because again, when I say news can be very jumpy, we could be back down by the end of this, this minute. Let's see what we got in terms of numbers. We got a 2.7%. Thank you, Ivan, for dropping that. 2.7%. So inflation remained unchanged from the previous report, coming in softer than the expected read of 2.8%. That's good for stocks. That's why stocks just jumped. We'll see if they can hold those gains. 2.7% remains means that inflation came in line with expectations and did not move. Came in lower than expectations and did not move from where it was last time around. Again, market thought it was going to go up, and then it did not go up as much. And so then the market said, okay, yeah, that's good for stocks, because stocks are like, okay, September rate cuts, boom. That pretty much locks in that in September, we are very likely to get interest rate cuts. Core inflation came in at 3.1%. Ivan, what was the forecast on that? Did we get anything mixed on core here? I see core CPI month over month came in line with expectations. CPI year over year. So dollar, again, soft off of this print. Let's pull up dollar for a second. You can see gold making just a slight recovery move there. I bet you VIX is already dropping like crazy. There's the VIX. Dollar index giving back some gains here this morning. You can see wicked up into this resistance area, sold off, and seems to be following through, at least with the CPI print. So core inflation came in 3.1% compared to the expected of 3%. Thanks, Ivan. Okay, so we did get a slight higher than expected reading on core CPI year over year. It's not shown on Forex Factory. So we got one soft, one hot. Take a look at the S&P 500 sitting back at those previous all-time highs, just shy of it. NASDAQ is also making a push here for the highs. Dow Jones also up here 0.5% today. And the Russell is a big winner. Of course, loves cooler inflation is the Russell. So let's take a look at bond yields. So bond yields moving lower here today, locking in likely a rate cut in September. That seems to be what the bond market is pricing in now. You've got the euro dollar higher here, pound dollar higher, breaking through this level of resistance, now turned support here. Dollar yen, pretty mixed. Dollar Swiss, a little bit lower. Dollar CAD, mixed here. The Australian dollar, Kiwi dollar. Let's see. Again, really important here, guys, is what happens. I always like when I watch the news event to pull up the 15-minute chart. Okay, because to Ivan's point, Ivan was on the ball with it. So thank you to Ivan. Core inflation did also come in higher than expected. Core inflation matters too. And in fact, it matters a lot. Core inflation came in higher than expected. Headline inflation came in a little bit softer. Consumer price index, X food and energy, right? So that's what core CPI does. It removes food and energy. Year over year for July came in at 3.1%. The expected was 3% and the previous was 2.9%. Thanks, Ivan. Yeah, so mixed data is kind of fair. That's not a particular, and I think that is why, yes, that looks big on the 15-minute candle, but look at the daily chart. Is that a big move on the dollar? Not really, right? Not a huge move. And you can see it on gold, right? Gold's actually now given back its half of its gains. So not a huge move. That is what happens when you get a mixed CPI report. I think stocks are just going to move higher because they're like, okay, risk event behind us, inflation generally cooling. And you know what the consensus here for stocks is going to be? This is my opinion. We'll see if I'm correct about this. The consensus here from stock investors and traders, they're saying that doesn't change anything. We're getting a rate cut in September. I think that's what that's suggesting. And so the stock market's saying, yep, we're getting a rate cut. That's all we care about. Move on. And, the dollar is, moving lower here because, kind of locks in a rate cut. Maybe there was some holding out bulls that were thinking, okay, this is going to be a really hot CPI print and we're going to get something really strong in inflation, and that could send the dollar soaring. But we're not quite seeing that here. NASDAQ, look at this. Here's a 15-minute chart. Here's the 1-hour chart, pushing right back on up to that previous high here. Stocks continue to run here. Just the bull run never ends, it feels like. Here's oil, moved below this level of support here. Oil prices remaining suppressed is good for inflation. Gold prices, again, big whoop in terms of price movement. You had a big spike and really not even really a big spike. That's a pretty modest move in terms of a CPI report for gold. That's got to be below average moves, which makes sense. You've been sitting in a VIX, a volatility index reading of 15.38. I mean, the VIX, the volatility of this market has all but dried up. We're talking about a market that just is not moving very much right now. And look, that will change, ladies and gentlemen. There will be a time where you've got chaos in the streets again, and gold and silver and the dollar and NASDAQ and stocks are moving like crazy, but that's not right now. Right now, you have a quiet market. Don't get deceived in a quiet market, because it's very easy to get used to the environment that you're in. At some point, you're going to get a huge volatility spike. Stocks are going to drop hard. We don't know when that's going to be, but that could send gold soaring like it did in April, right? This volatility spike we saw in April was very, very bullish for gold. It could happen tomorrow. We don't know exactly when that's going to happen, and trying to time that is very, very difficult. However, again, as the day goes on, the trend continues to be risk assets like stocks are doing quite well. The trend continues to be dollar index is choppy to sort of soft. And then the final one is, take a look at metals. The metals have just been choppy for months on end. And that's coming from somebody, I'm bullish on gold, but you can't let that blind you. I'm not placing any trades on gold because look, this thing is just moving wonky. It's moving sideways. And I'd rather stay on the sidelines than get chopped to pieces by this thing. I'm going to wait for this thing to come down to a key level. I actually would prefer that gold comes down for a couple days and give me something here, or a breakout and then give me something here, right? Those are trades that I like a lot better than just sitting in this chop fest and hoping and praying that you get some volatility. It's a painful spot. I think the best thing you can do when the VIX is dropping like this, when the volatility is so low, is just look at something else. And again, that's why we have the EdgeFinder. It helps to scan for setups that are moving more aggressively. So like NASDAQ's been a reading here for a while. S&P, I even like silver more than gold right now. Euro dollar is one I'd like to look at. Euro Aussie, pound Aussie. Yes, gold is on the bullish list, but again, technicals are just not quite ready for a setup for my own trading. So I'm just going to remain on the sidelines and wait for that trade to come to me. So if I go take a look at the cousin of gold, let's take a look at silver here, right? Silver, I'd be interested in silver if it were to give a little bit more of a pullback. Maybe this 36.5 level looks attractive to me for a possible buy in a, what I think is still overall a very structurally sound upward trend. So we'll see. Nick, why is the S&P going down today? What's your opinion? It's going up today. Here's the S&P 500. It's moving higher. Boom. How come gold is pulling back? Isn't it supposed to be bullish pricing in a potential September rate cut? So Andrea, that's a good question. The September rate cut is pretty much already expected in the price of gold. The market already thinks there's going to be cuts in September. That's why this didn't really change the narrative very much. Had you have gotten a very, very strong, decisive CPI, like a really hot CPI or a really cool CPI, it would have changed the calculus a little bit. The reason markets are kind of unchanged, other than the indices, which are just ripping for fun at this point, the reason I think is because we didn't really get anything too surprising. It wasn't a huge, we highlighted this already, but there was a mixed report, core CPI and CPI, right? Core CPI was a little bit hot. CPI was a little bit soft. Mixed, right? They kind of cancel each other out to a degree. So price action is reflecting that. It makes sense once you kind of recognize, okay, yeah, so core and CPI both kind of, so you have the move on the 15-minute chart. And again, if you're looking at like the 5-minute, you're like, oh my gosh, dollar's moving big. But look at the daily and it's not an outsized move. If you had this move going on today, that's an outsized move. These moves, those are outsized moves. Those are significant moves. But today's move, yes, it looks big on the 5-minute, but it is not particularly big on, on the bigger picture. Rate cut probability is actually lower at 80%. Very interesting. Did it move? What was it yesterday? I feel like it was already around that range. Maybe like 89% down to 80%. Is that right? I haven't looked at it in a couple of days. NASDAQ continues to push higher here. Look at that big push right at that 830 mark. Yeah, so indices continue to rip. Nothing new there. Indices have been on a rip. Momentum is just dominant in this market right now. Like things that are moving seem to keep moving. Things that are not moving seem to keep not moving. You can extrapolate that across a lot of different things, like healthcare, for example. Healthcare has been kind of a loser, boring thing. Nobody's looking at it. You look at semiconductors moving like crazy. Take a look at, I don't know, what's another example? We could take a look at like financials, right? So you have stuff that's, when stuff is moving, right? When the NASDAQ's moving, it's moving. When you look at gold and it's just choppy, it's just staying choppy. It's very interesting. You're getting this tale of two markets where some things are just grinding and trending and other things are just going sideways. Core is much more important for the Fed. It is true that core is important to the Fed. Headline is also important, though. They both very much play a key role. And if you want to get the Fed to really make a decisive change in what they plan to do, you want both core and headline to decisively say one thing. So that's where I think you've kind of got some interesting dynamics at play. Let's see what else we've got. So in terms of how this changes things, let me just do some quick math. So inflation is going to come in and it is going to be, let's see, it's going to be mixed for gold still because you had core hot, headline cool. Yeah, it's just going to not change scores very much in the EdgeFinder because again, yes, you had a cool CPI headline, but you can't just look at one thing. Inflation is a broad reading. I mean, inflation really is CPI, PPI, PCE, and then the core PCE, PPI, and CPI as well. Like that's like readings of inflation are a broad, kind of many ways to look at it. I think it's important to kind of take a holistic view, which is what, the EdgeFinder does. We look at CPI, PPI, PCE collectively to kind of get an idea, generally speaking, of where inflation is at. So yeah, dollar's a little bit softer here today. VIX really evaporating here down into the 15.2s. I actually am getting close to a point where the volatility index is so low. If you start getting into like the 14s and the 13s, like I'm considering how cheap it is to pick up some hedges, like buying some puts on things, not necessarily like wanting to like make a huge short bet, but on stocks that maybe I don't like as much or would like to just hedge my portfolio a little bit. It's almost tempting at such a low VIX. The volatility is so dried up in this market, and one thing that scares the market and volatility could expand, dramatically. Nick, can you give us a clear view for stocks if the Fed cuts or not, if you don't mind? I'm big on stocks. Roberto, so yeah, so on this channel, I focus, if you're interested in individual stocks, check out my second YouTube channel. It's Trader Nick Stocks. On this channel, I trade mostly high-level stuff, indices, gold, commodities, and currencies. So if I'm looking at the indices, it's pretty straightforward. Rate cuts, more probabilities for rate cuts is more bullish for stocks because again, it means the consumer can go borrow money cheaper. It means stocks and companies can borrow money cheaper. But please understand something. If the Fed cuts in September, just because they say we're announcing a rate cut, it doesn't necessarily need to move the market. Why? Because you're talking about it. I'm talking about it. We all know what's likely to happen before it happens. The market is forward looking. So whenever you are looking at the stock market indices, this always throws people off. A very common beginner mistake when it comes to fundamental analysis is, hey, the Fed cut rates today. Why isn't the stock market going up? Well, it's because the market is looking ahead. By the time we get to September, guys, it's going to be almost certain that we know what the Fed is going to do. And if you're almost certain about something, is that going to make the market move a lot? No, it's not going to move the market. What are we not certain about? That's what moves markets. What we're unsure about, when we're uncertain, what we don't know fully about, that is what makes markets move. And so what we don't know is, are we going to get 3 cuts this year? Are we going to get 2 cuts this year? We know we're going to get 1. Like September is pretty much locked in. I mean, something could drastically change, and that's where you get those not random, but some very outsized sudden movements. Those could happen, but just because if they cut in September and the market already expects it to cut, it's not going to move the market. The market already moved based on September, right? The market has been moving based on September. The market always looks ahead. It's looking at what they're going to do in December, what they're going to do in November, right? It's looking at future decisions and future possibilities. It's not looking at what's happening today, because by the time today already shows up, people have figured out what's likely going to come. That's why the market's so smart, and that is why it's hard to be a profitable trader. Yes, trading psychology is important. Yes, don't over leverage, but those are beginner things. Those are novice things to master, is learning risk management and trading psychology. What's very difficult is actually finding an edge and outsmarting the market. It's very difficult to do because the market is wicked smart. It's really, really intelligent, and it picks up on what's happening, and it figures out what the future is likely to be before it happens. It's not perfect. Otherwise, I wouldn't be trading. If I thought the market was fully efficient and perfect, I wouldn't be trading, because if you believe that the market is perfectly intelligent and super efficient, then there would be no room to beat it. But I believe that it is possible to beat it. It's just certainly not easy. I would say the market is very efficient, not perfectly efficient. That's my opinion on it. Anyways, Russell index pushing higher here today. Dow Jones a little bit higher. Stocks back to their highs. Gold is now making a little bit of a move here. 5-minute chart looks a little bit stronger. But again, if it was a really one decidedly way inflation report, we would have gotten a much bigger move across a lot of different things. Let's just take a look at some currencies here. I do like the idea of buying the euro on a dip, but we're not quite getting one. So I'm watching the euro, pound dollar, pretty neutral, dollar yen. Actually, let me just pull up my currencies for a second. Let me look at some currency setups. Let's go major currencies, minor currencies. Okay, so a bit of a thin watch list for currencies. Let's look at them. So Euro Aussie, I'm looking for possible bullish setups. Euro Aussie, I was watching this yesterday. Looks like it bounced before I could get in. I'm looking at this area here. If we do come down to that area, that could be interesting. Let's look at pound Aussie, pound Australian dollar. Looking for bullish setups on this one as well. Not super fan of where I would have liked to get it down in this area. I didn't realize it was at that level already. Otherwise, I probably would have bought that one. Euro dollar. As I mentioned, euro dollar, I'm interested in bullish setups, but would like to see this thing shoot lower here. So dollar yen getting bearish setups on the EdgeFinder. This one is, I'm always really cautious to short dollar yen, just because it's a very expensive carry trade to hold this thing short. If you've ever shorted dollar yen and held it for several days, you know what I'm talking about. It's very expensive to hold yen on the short, on the long side. So if I'm short dollar yen, that's a long yen position. That's a very expensive trade to hold on to, right? So I would lean bearish on this pair, but I don't think I have enough of conviction to short dollar yen and hold the setup. If this thing got extremely bearish, like if we started getting like a very bearish reading on the EdgeFinder, and it was like you're talking about like a -10 or -11 score, I might short the yen, short the dollar yen. But the carry trade is just so expensive on this one that I typically avoid shorting dollar yen or yen pairs in general if I can. Nick, where's Chris? He's still doing videos on the A1 Trading YouTube channel, but he is unfortunately unavailable to do live streams at this point. He's got another prior commitment that has changed his morning routines. We're still collabing inside of the Discord channel and stuff like that. He's just no longer in the live streams. The Dow is ripping today. Yeah, we got some movement higher in the Dow Jones for sure. Dow's up 0.6. And again, stock market indices continue to rip. The bulls are on parade, which is just craziness. So let's see. Let's see what happens with indices from here. The market is not intelligent on its own. It's rather there's a reflection of the way traders all over the world reacts to data. Well, the market is the collective of the smartest traders in the room. Ultimately, when I say the market, I'm referring to the marketplace of traders, right? And the market is super intelligent. It is very difficult to beat the market. And that is the real reason. On social media, you always hear, oh, trading is hard because you got to manage your emotions. Yeah, but that's easy peasy compared to figuring out how to actually predict markets better than the market predicts itself. It's hard to do. Everybody thinks it's easy, right? Everybody looks at a chart and they're like, oh yeah, it's easy to determine which way it's going to go or what it's going to do next. And it's kind of like a slot machine at a casino, where a slot machine looks easy and fun. And if you know, the numbers don't lie. It's same thing in the trading world. Most people lose money markets because it's hard as you know what to determine what markets are actually going to do next. It looks easy. That's why a lot of people call it the greatest casino on earth, or the biggest casino on earth, is because it's deceiving in the way that it looks like you can predict what the market's going to do, when in reality, it is ridiculously hard to do. Is it possible? Yes. Can you make educated guesses and make money in trading? I'm not saying it's impossible. I do it. Otherwise, you know, if I thought it was impossible, I wouldn't be here. But it's certainly not easy, and it's certainly harder than beginners believe it is, right? Beginners have the worst learning curve ahead of them because they think it's easy. People who have experience know it's hard. It's that like learning curve where U-shaped stuff, right? Where this is what trading journeys look like. Actually, I should say it really starts like this. So when traders first get into trading, they believe it's easy. Then the more they do it, the more they're absolutely humbled into the point where they think, holy crap, trading is ridiculously hard. They thought it was easy when they started. You have so much confidence when you start trading. And if this is you, by the way, let me know in the comment section. It was me. So I'm telling you from personal experience and from the thousands of, you know, comments on YouTube that I've gotten over the years. This is the story of the average trader. Yeah, there's an expression, there's a concept, Thomas has got it, the Dunning-Kruger effect, right? When you start in trading, you think it's easy. You learn more and realize, wait, this is hard. And then you learn more and you're like, this is really hard. And then you keep learning and you realize, oh my gosh, I'm a moron. And then you realize this thing is so hard, I don't even know how anybody makes money in this. That's this point right here. And at that point, a lot of people, the people who don't truly love this stuff, they quit over here, they quit over here, they quit over here. But a lot of people quit right around this point because they realize, holy crap, trading is hard. And again, it's BS. It's a cop-out to think trading is hard because trading psychology. I am very adamant about that. That's not why trading's hard. If you had a coin, right? Let me ask you this. You want to hear the biggest stupidity around trading psychology and why I think it is such a dumb cop-out and why I'm very passionate about the subject? You have a coin, okay? Picture you have a coin and it has a 60% chance of hitting heads. And you have somebody who wants to take the other side of your bet. You're going to bet over and over and over on the 60% side. Who wouldn't? It's obvious. It's easy, right? Trading psychology is stupid because, okay, it's not stupid. Trading psychology is important. Don't get me wrong. But using trading psychology as the reason why markets are hard is so stupid, because if you had a coin that had a 60% probability of hitting heads, you would flip that no problem, and it would not be psychologically difficult to bet small and just keep flipping the coin. Eventually, you're going to make a ton of money, right? It's easy. There's nothing difficult psychologically about this. If you had a 60% probability of flipping a coin and it's going to hit heads, and 40% chance it's not going to hit it, and you know that, and you can just see it every single time, over time, you're going to make way more money. Psychologically, that's easy. There's nothing hard psychologically about that. But what's hard about markets is that if you're good in markets, like really good, you might, with years of experience, you might be able to get 55% with years of experience and years of hard work. That's why trading is hard, because finding edge is so much easier than it sounds. I'm sorry, it's so much harder than it sounds. That's why trading is hard. Trading is not hard because of trading psychology. Trading is hard because it's hard to find an edge in a market that is wicked smart, and everybody wants to do the same thing. Everybody wants to make money in the markets. Everybody wants to make money in the markets. You have to take money from someone else. You have to be better than the rest. That's not easy, because there's some brilliant people that are trading and investing in the financial markets. You're trying to take money from them. You think that's going to be easy? Heck no. Assets are priced pretty close to what they're supposed to be priced at. That's why it's hard. So when you look at the price of gold and you say, oh, gold is overpriced because it's hitting a level of resistance. Come on, man. Do you think it's really that easy? Do you really think that trading is hard because psychologically sometimes drawdown's not easy? No, that's not why trading is hard. It's because you think it's overbought here, and maybe it is, but it's not that simple. Maybe there's new data that tells us actually at this price, now it's underpriced and it's going to explode higher, right? So that's why trading is hard. That is why trading is hard. Okay. I know somebody just heard that rant and that might have opened up your brain to that. That was eye-opening to me when I realized the real reason trading is hard is because it's hard to predict where the markets are going to go, not trading psychology. That is a cop-out that will keep you back for years. Don't let it do that to you. Trading psychology is easy once you just risk small. If you're risking big, yeah, you're going to trade like a moron and you're going to be super emotional about it. That's easy fix. Trade with a minimum trade size, see what it does to your trading psychology. It's easy. What's hard? Actually predicting where the market's going to go. That's hard as anything. Not easy to do. Okay. So I know I just ranted hard on that, but it's a really important topic. And if you are going to become a profitable trader, the sooner you accept what I just discussed, I think the better off you'll be. People, Bashes, I kind of agree. Risk management fixes a lot of psychology. Dude, I'm telling you what, if you struggle with trading psychology and you trade Forex, for example, use a 0.01 lot size. See how much easier it gets. Trading psychologically gets so much easier if you just have a small trade. Most people's problem trading psychology, they're just calling it trading psychology as a way to excuse the fact that they're just risking stupidly, right? Don't be that person. I know I'm ranting hard today, but I've done this for so long, man. I've seen so many traders come and go. Some of you guys like Lee and Bashy, like some of you guys have been around, and I truly respect your grit to do this. I've done this for years. I have way too much love for the markets, passion for this subject, to let a lot of people. Here's you want to hear a scary thought? There's 900 people watching this. In 5 years, most people here are not going to be trading anymore. If you are the person, let's just do a little cheesy, corny thing. If you think you're the person that's going to stick around for the long term, drop a me in the chat. If you think you're going to stick around for the long term, if you're insane enough, if you're crazy enough to be the person that's left over in 5 years, telling you what, probably going to be 5% or less of you. I'm not saying that to discourage you or to tell you that trading is impossible, but I am telling you that because that's how hard the trading industry, man, is like a beach town. I've said this 1,000 times, but it's the best analogy I can think of. It's like living in a beach town. 90% of the time, people are not there. Then the 10%, when it's vacation time, people show up, and then everybody leaves until the next year, and it's a whole new group of people. All right, love it. Love it in the chat. There's a whole bunch of people saying me. Man, I truly wish, whoever you are, wherever you are, I may not know you personally, but I do genuinely wish the best in your trading journey. And I am glad that you're sticking through my rant and hopefully have accepted in your brain the markets are hard as crap and I'm going to figure it out anyways. That's the level of grit that it takes. That's what it takes. Winners never quit, quitters never win. That's exactly right. Trading, people ask me, like people I meet in my real life, they'll ask me like, hey, can you teach me how to teach me how to trade stocks, or teach me how to or buy stocks, or tell me, can you teach me like how to trade, or how do I do that option stuff? And it's like, man, there is no substitute for just 10,000 hours you in TradingView, or 10,000 hours and you. And honestly, I know this sounds like a sales pitch, but genuinely, the EdgeFinder, probably 5,000 hours of my life has gone into building and developing this tool. Not because, yes, because we sell the tool, like it's a business for me, but also because it's genuinely the reflection of scanning markets. It's my methodology that I've curated, that I've built over my years of doing this. That is ultimately what the EdgeFinder does, is it helps me to scan for the types of setups that I want. The probability-based decision-making comes in part from what the EdgeFinder helps me to find. Quick little plug here. If you guys are not in the Telegram channel, I got something cool for you. We're doing a giveaway this week. If you have not joined the giveaway, here is some information on the giveaway that we're doing. So inside of I'm going to drop it here. Actually, yeah, there we go. We can just drop it in here. So boom. If you're not in our Telegram channel, right now we're going to drop the link. The Telegram channel is where you can join this giveaway. Did that link work? I don't think that link worked. Hold on. I'm just going to delete this and try this again. If you are not in the Telegram channel, the link is in the chat right now. We are going to drop the link to the EdgeFinder giveaway. There it is. Why is that hyperlink not working? Am I missing something? Oh, no, it's working. There we go. Okay, there we go. Okay, so if you want to enter for a chance to win a free copy of the EdgeFinder, here it is. Click this link. It's been dropped in the YouTube chat. So if you are watching here live on YouTube, if you're watching, I know a lot of people watch these back at a later point, find it in the description of the live stream, and then just join our Telegram channel, and then just enter for a chance to win. So when you click this form, let me show you what happens. There it is. Boom. Just put your name in, put your email. We'll ask you. This also is a way for us to collect some information as to what people like about the EdgeFinder. So just include like what your favorite feature of the EdgeFinder is. And then just fill out that form. Takes 2 minutes, not even, like 1 minute. And then you'll be entered for a chance to win a free copy of the EdgeFinder. But step 1, join the Telegram. Step 2, fill out the form. And then step 3 is you might be the winner and you might get a free copy of the EdgeFinder. Like I said, link is in the chat right now. Everyone, please like, share, and subscribe. It's very much appreciated. Thank you. Thanks, Bashi. Appreciate you. We had some good rants today. Some good rants. Did we have, let me see. Do we have another person coming on? We do not. Just me today, guys. That's all you get. Yeah. So anyways, let me just take a recheck of what has happened since CPI. Let's take a recap on this. So we've got S&P 500 made a move higher. Well, actually, before we talk about price movements, let's just recap for people who are just tuning in what happened with the CPI this morning. So here it is. The inflation report came in, and it came in softer than expected for headline CPI. But core CPI came in higher than expected. Why can these two things go differently? Well, because core CPI removes food and energy, which are a volatile component to the way the consumer price index is measured. Food and energy prices go like this, right? Other prices go like this. So when you are talking about core CPI, a lot of times the Fed actually prefers to look at core CPI. So what we see here is that core CPI was hot. CPI headline with food and energy was cool. So we see the stock market jumped higher and is now it's just a little bit soft. I mean, it's still higher on the day. Gold is slightly higher, but not a huge move in either direction. Bitcoin is doing the same thing as stock market, but a lot less upside. Dollar index dropped initially and is rebounding a little bit here. I'll be completely honest with you guys. I would not be surprised if the dollar just retakes where it was to start the day. I would not be surprised if the stock market is just softer for the rest of the day. That's going to be my best guess of what I think happens today. I'm not a day trader, but that would be my day trade if I was a day trader, would be, again, not financial advice, not what I'm doing. And you could look at this in 4 hours and be like, Nick's an idiot. But I would say softer for stocks for the rest of the day. And I would say dollar should rebound just back up to here because you had a mixed report. Market made an initial jolty move down or move up, but I wouldn't be surprised if you get kind of just a reversal or a reversion back to where we started, or at least some portion of it. Maybe we go 50% back. That's my opinion. I could be dead wrong. I'm not a day trader, like I said. I'm more of a swing trader, but that's my thought. Nick, do you have a buy now, pay later for the EdgeFinder? Actually, we do. If you're somebody who is interested in getting the EdgeFinder, but you would prefer to, actually, we have one better than one better than that, Jim Master. We do have buy now, pay later options, but we also have payment plans available. So you can split it up into 3 payments to make the cost significantly easier to do. So Chandler or James, if you guys don't mind, if the producers mind dropping the link to send a direct message to our support team, if you'd like to meet or speak with our staff about setting up a payment plan on the EdgeFinder, if that's something that you're interested in, definitely take a second to send a DM to us on our website. So when you click this link, you'll be connected to a member of our support staff at A1, and they can tell you about payment plans or buy now, pay later, or splitting it up, whatever you need to do. If you want the EdgeFinder and you just can't afford the full price, we get those requests all the time. And we have plenty of people who just elect to go for like paying it in pieces, split it into 3 payments just to make it easier. What do you think about the IBM fall? Did IBM make a big move today? Yeah, IBM is lower here today. Stocks open up in 20 minutes. I'm going to probably make a stock market video today. Stock market channel's been doing pretty well, man. It's been a lot of fun. I love talking stocks. So if you're a stock person, find me over on Trader Nick Stocks. It's Trader Nick Stocks. If you like individual stocks, we've been having a good time over there. James, who heads the edits for that, has a lot of fun with the meme inserts and edits. James, I watched Trailer Park Boys yesterday just because you made the Leahy meme, him falling down the stairs. I love that show, man. It's so stupid, but it's my comfort show right now. Anyways, I like the stock channel. Thanks, Bashi. I've seen your videos, Roberto. Appreciate you on that. Supporting small YouTubers. Well, I mean, I say that jokingly, but it's not like my videos get a ton of views. I mean, I do get good views, but the trading space is not like, it's not like makeup or true crime, which those types of videos get like, millions of views. Trading YouTube is a smaller place than some other places, but you're ignoring my message. I'm sorry. There's a lot of messages that come in, so I don't get to everybody, but my mobile number is not supported by your website. If you need help, just send us a direct message on our website. If you guys could drop the chat with us link one more time, that would be awesome. If you have questions or need help, just speak to our support team. They can help you with whatever you need. Link is right there. Near 500,000 subscribers, not so small. Yeah, we're about to hit 500,000, which is a crazy, crazy number. The stock channel, what I meant by small YouTubers is the other channel has, I think we just crossed like 2,000 subscribers. So it's a new channel and I'm having a lot of fun with it. But some of the videos have been doing really well. Like there was one that got 20,000 views and I was like, this is awesome. So I'll probably be doing more stock content. In fact, speaking of that, I need to get off and start filming a video for today. Thank you guys very much for tuning in. Remember, we're doing the EdgeFinder giveaway at the end of this week. All you have to do to enter for a chance to win a copy of EdgeFinder is join our Telegram channel using the link being dropped in the live stream chat or in the description of this live stream right now. Join us in Telegram, fill out this EdgeFinder giveaway form, and we'll get you set up there. All right. Thanks so much, guys, for tuning in. Have a great rest of your day. See you back.
Thanks for watching today's show. Remember to subscribe if you're new and to turn on post notifications so you don't miss the next one. If you're looking for more free trading content, consider joining our Telegram channel, linked in the description down below, or find free courses, prop firm discounts, and broker sign-up perks on our website a1trading.com. That's all for today. We'll see you back tomorrow.